open the floor for the questions and answers. So if you guys have any questions, please feel free to ask. So who wants to start? Anybody wants to ask questions?
At first.
Yeah, you can go first. Yeah, Christy.
Yeah, on topic but off topic, I'd love to know what Mr. Grant's thoughts are on the interest rate and where the stock market is right now.
Well, listen, if you were a client, I would say, I'm sorry, you need to go and see your financial advisor. I'm a real estate person, but of course you can't detach yourself. My view is, and I've lived through hyperinflation and worked through hyperinflation. It was in a different country, but nevertheless it was global. There are trillions of dollars being pumped into the economy where interest rates are crazy low, that if you are an investor or a retiree and you want to put a certain portion of your money into bonds, you're lucky to get 0.5% unless they're very long term. Now, those are the ingredients for inflation. I won't dare mention the term hyperinflation, but having lived through it, it happened very quickly, and it was through a combination of lower interest rates and money, in a sense, being created by government. It was also, at the time, a result of oil prices going through the roof, which at the moment is not happening, but we have to remember the US has declared that it's going to be no longer energy independent if that conflicts with a policy in relation to things like sort of pipelines and so on. So I believe there are chances of rising interest rates and rapidly rising inflation within the next 2 or 3 years. Other commentators are saying, no, the Fed has full control. But I think that it's clear that real estate and equities, that is shares in companies, are a counter to inflation. In other words, they're not inflation proof, but they have a chance of keeping up with inflation. So my view is it's quite possible, even at the borderline of likely, but as I said, I'm not a financial expert.
Okay, thank you. Tony, who wants to ask next question? Okay, Alicia Thompson asked the question to Mr. Pollard. What caused the increase in square footage in Myrtle Beach retail space in 2018 or 2019 from 14K to 40K? Secondly, do you have any advice for smaller retailers that do not have access to same electronic data for sourcing locations?
Well, that's a good question, and there were properties added in each of those categories, which is Myrtle Beach is one of the places that experienced some retail growth in terms of additional new retail properties. So that would account for the difference in the increase in properties. The difference between 2018 and 2019 is where our data was sourced from, and the 40,800,000 represents the entire market, including very small properties. Prior to that, we were only looking at properties that were anchored or larger, anchored type properties. In terms of the data, there are good. It depends on. I think the most important thing for the small retailer is to understand who their customer is, and nobody knows the answer to that better than that small retailer. From there, I think if you can align with different professionals, you can certainly get some analytics that are good. For example, if you let's pick North Myrtle Beach or north end of Myrtle Beach, where Fresh Market and Publix is located. If you thought, well, I want to be in that area, I can do some easy demographics, even online, and determine that household incomes are higher up there, and that works for me, then you can work with companies like ours or others to get the mobile data for those Publix and for that Fresh Market, which tells you what kind of people are coming to that area. You don't have to have that. That's not critical, but that's helpful. And then the basics also apply, which are What are the traffic drivers? How easily can you be seen? Can you be accessed? And then I'm not trying to promote myself, but a good local person that knows kind of behind the scenes what's happening or what projects are coming is always good to align yourself with. Just like when you're buying a home, it typically works best to have some representation of people that know the underlying currents in the market.
So who has the next question?
I had a question. I know that right now the interest rate's low, so a lot of people are buying houses, they're buying real estate. A lot of people are just trading up, just sort of try to lock in that interest rate. But at the same time they're doing that, I'm a home builder and I work in Charlotte, and I'm seeing the prices of material increase to insane proportions. And what sort of percentage would y'all think that it would hit till it levels out to where construction slows down?
What I can say in terms of commercial real estate is it's not only product pricing, but it's product availability. And you probably know this too from your own business, whether it's windows, I would imagine, things like that. Steel takes extremely long lead times. So as much as pricing, it's availability of the raw materials themselves that we've seen on the commercial real estate side.
Yes. I would say, as a generalist, what I've noticed over many years in many places is that the bigger house builders assemble land. They have land banks, and that means they bought their land at a time when land prices were very much lower. And so some of the large-scale residential house building companies have that margin. They naturally want to get the maximum prices, of course, for their land, and they think back a year rather than maybe 10, 15 years when they bought the land, possibly without zoning. But there, to me, in house building and house sales, residential property, as compared with commercial, where very few developers build long-term land banks in commercial property, you have that built-in margin. So the bigger players in the residential marketplace do have that flexibility. And if for a time when supplies, as Rox just mentioned, are scarce, supplies of building materials are scarce, they have the ability to continue building and making profits on their total costs, including land, which commercial developers might not. So I think that will tend to hold prices down, and that they, although they're rising and residential prices are rising, they won't rise as quickly as construction costs, at least for a while.
Okay, next question. Anybody else have questions? Okay, I think we are out of time. So again, thank you, Tony and Rox, for coming here and giving your busy time, enrich ourselves about the more about commercial real estate. And I want to thank Dr. Rob Salvino also for joining this session. And Kobe is always helping us to arrange this session. And all of you who came today for this session, I hope you liked it. And I will see you guys tomorrow in class, many of you tomorrow in class, and take care. And I think we can conclude today. This is 10 minutes past our time, so we will conclude today. Anybody else want to say
Thanks,
anything?
everybody. Great job.
Thank you so much.
Thank
Thank you
you
so much for your time. Thank you.
Thank y'all.